What is up guys, my name is Ignas, welcome back to the channel. This week I did a dividend comparison on 3 names from the IT services industry, and one of them stood just a bit over the rest. It's a company that likely no one has ever heard of. The name is Fidelity National Information Services, ticker symbol FIS. It's one of the larger dividend-paying names from the IT services industry, currently at a market cap of $46.5 billion. But these recent times has not been great for the share price. In 2022, the company lost almost 1/3 of its value, down for 32.87%, and we are now right there at the 52-week close of $75.85. Now zooming out to 5 years, it was trading at $152 just back in 2020, though the price has been consistently moving up before that. In 2017, the stock was trading at $93.39, so at $76.57 now. In 5 years it is lower for 18.14%. So the stock has not been performing that great recently, but I've checked into it a bit, and I believe there could be some opportunity in the stock at these levels. So to look into it further, first we'll check into financials and fundamental ratios, then where the analysts think the stock will be trading at next year. After that, what Superinvestors and insiders are doing with it, and lastly we'll take a look into the technicals of the price chart. Let's see if FIS is worth buying into, or if we should steer away from this stock completely. An early thumbs up would be greatly appreciated, and with that out of the way, let's begin. So first let us take revenue, and this is here the company's history of the last 5 years. Back in 2017 they were bringing in $8.7 billion on the trailing 12 months. Then in a year in 2018 that decreased to $8.4 billion and stayed pretty much the same in 2018, up 0.28% for the quarter year over year to $8.42 billion on the trailing 12 months. But after that revenue jumped way up. In 2020 we saw it at $12.2 billion, a 40% increase for the quarter year over year. Then in 2021 that was at $13.2 billion. And with the most recent quarter in 2022, we now have it at $14.39 billion. So the company seems to have missed that usual slump in revenue in 2020, but what was the reason for this boom by the end of 2019? It turns out that by the third quarter of 2019, they have acquired WorldPay, a global leader in e-commerce and payments, which expanded on FIS capabilities by enhancing its acquiring and payment offerings. So the acquisition not only bumped their revenues, but they have been continuously on the increase after, with just under 10% higher for the quarter year over year. Now the second metric we are taking is the price to earnings. So back in 2017 the stock was trading at a P/E ratio of 42.92. Then in 2018 earnings shoot up, so price to earnings went down to 24.36. And in 2019 as earnings went a bit lower, we saw the price to earnings going back higher to 51.32. Now we can find that though revenue went up in 2020, that was not the case with earnings per share, so for a few quarters we did see the price to earnings at 0. That is greatly connected with the number of shares outstanding, and later on we will take a look into that one too. In the middle of 2021 earnings rolled over into positive, but with the stock price at the highs, we had price to earnings stopping at 923.78. But now as the price is moving lower, the P/E ratio is also a bit more reasonable, and with the 52-week price lows, we now have the P/E ratio at 56.06. So even though the P/E ratio did go lower, it is still not at the levels that we have seen back in 2018. Next metric we are taking a look into is the number of shares outstanding, and this here should explain why we saw price to earnings going into the negative. So back in 2017 the number of shares out was at 334 million. In a year in 2018 that decreased to 333 million shares, minus 0.3% year over year. And then in 2019 it reached the bottom of 327 million shares out. But after that WorldPay was acquired, and the number of shares almost doubled to 625 million. In 2021 that went to 624, and with the most recent quarter in, there was a decrease of 2.08% year over year to 611 million shares out. Now we could say that in 5 years they did increase on the number of shares outstanding, but we also know exactly why that happened, and even though not by much, In the last 2 years, that number started moving back lower. Now the next metric is the dividend payout. So back in 2017, that was at $1.09. Then a year in 2018, it was increased to $1.21. And in 2019, we saw it at $1.34. Now the world pay deal did slow it down a bit, as by the end of 2020, the dividend payout was still close at $1.36. And with the stock price at the highs, we had the dividend yield bottoming at 0.94%. But after that, the company went back to increasing payouts. In 2021, it was at $1.53, and then with the most recent quarter in, we have it at $1.79. So there was the slowdown in 2020, but otherwise they have been consistently increasing on their dividend payout. But besides the payout, what also keeps me interested is that we now have the dividend yield the highest it has been in the last 5 years. To further check on it, we'll use my dividend investing watchlist on Google Sheets. So we are now in my dividend stock watchlist, and this is here the tab for FIS. We have that same dividend yield history for each quarter of the last 5 years, and out of this information we calculate that on average in 5 years the stock was trading at a dividend yield of 1.29%. So the worst time to get in was by the end of 2020, where we saw the dividend yield at 0.94%, under the 5-year average for 27.02%, but as the stock price has been moving lower and the payout was on the increase, it is currently trading at a dividend yield of 2.43%, which is way over the 5-year average for 88.65%. Now we could assume that maybe the dividend is going too high and they may need to cut it, but we already checked on the payout ratio in the dividend comparison, which came in at around 25%. So I believe that they are not at all in a position where they would need to consider their position on their dividend payouts. So we have looked into this particular stock. If you would be interested in doing a similar analysis for another name yourself, you are able to access this watchlist by following the first link at the top of the description. Otherwise, feel free to add the ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunities in the market that I'm still missing. So we have been looking into FIS history, but how about expectations? Where the analysts think the stock will be trading at next year? On Yahoo Finance, we have information from 32 price targets of analysts. The numbers range from the lows of 88 to the highs of $160 per share. The average out of it is $117.22, and currently FIS is trading at $77.44. So if we take the average of analysts' predictions for next year, they are expecting that the stock price should be going up by 51.4%. Now let us take another angle. Here we have analysts' earnings estimates for next year, and out of 32 analysts, they on average expect that FIS will be bringing $7.73 in earnings per share. If we assume that the price to earnings ratio for next year remains the same, then on average we are looking into an increase in the share price by 9.6%. So overall analysts seem to be really bullish, as they are estimating that next year the stock price should be going up from 10 to 50%. Now for the next part we'll take a look into Superinvestors. And at first glance it looks really decent. Currently 5 portfolios are holding FIS, 1 reduced on their position, 1 did nothing, and 3 actually increased on theirs. So Cantillon Capital Management reduced their position by 0.53% and are now holding 4.2 million shares, which is 3.24% of their portfolio. So it is the largest position in the stock out of these 5, but the reduction is quite minuscule. On the other hand, the bulls are way more committed. First Eagle Investment Management increased their position by almost 300% and are now holding just under 2.3 million shares, taking 0.59% of their portfolio. But the largest addition was with Dodge & Cox. They started a new position which now takes 0.45% of their portfolio, but they bought almost the same that Cantillon Capital Management already has at 4.1 million shares. So there has been several huge increases in exposure, and overall we can definitely say that Superinvestors are net buyers of the stock. Now let's also take a brief look into insiders. They seem to be a lot more bearish. In the last 6 months insiders did 0 long transactions, but they did manage to sell 19 times, totaling at $36.4 million. So even though the sums are way smaller with what Superinvestors are doing, it's still interesting that insiders have only been selling out. So now that we went through fundamentals, let us take a look into technicals. Back in 2020, just before the pandemic, FIS reached the price of almost $160 per share. Then it did try to go back there a few times in 2020. One was in September, and the second in the first half of December. There was also another try in 2020, but after we saw the stock consistently going way lower. So by the middle of September of 2021, all of these moving averages has already crossed lower, and the price kept on stumbling down too. In October of 2021, we tested the resistance of the 50-day moving average, then in the beginning of 2020, did the same with the 100 one, went back there a few times in April and in June, and then in August with the price moving sideways, we had it testing the resistance of the 200-day moving average. So the moving averages are still pointing downwards, relative strength index is way and oversold at 21, and the lines of the MACD has been moving in the bearish direction for more than a month. So if we get just a bit more strength in the RSI, and the MACD lines change direction, I believe we could find quite some upside, with the resistance at the 200-day moving average, which is now at almost $100 per share, meaning an increase in the share price at these levels of almost 30%. So we did go through all the metrics I wanted to look into, and now we can do a quick recap of what we found. There was a bump up in revenue in 2019, and after that it has been continuously moving up. With the market moving lower, the price-to-earnings ratio has been also following for the last year, but it is still not the cheapest it has been for FIS in the last 5 years. Now the number of shares out did increase, but we understand that it was done with the acquisition of WorldPay. Looking into the dividend payout, it has been consistently moving higher, and with the price at the 52-week lows, we have it way over its 5-year average plus 88.65%. Analysts are also bullish, as they are expecting that next year the stock price will be going up from 10 to 51%. Superinvestors also share this optimism, as they have been increasing on their positions more than selling, though insiders have only been selling away. Looking into the chart, it is quite interesting. Relative strength index is way down close to 20, but we do see the gap between the lines of the MACD closing in, and if the stock starts going higher, I'm looking into the resistance of the 200-day moving average, which at the current price is at 29% upside opportunity. And that was it for today. Make sure to support the channel and leave a thumbs up under the video. What do you think, is Fidelity National Information Services a worthy pick right now? Are you by any chance already holding it in your portfolio? Share your position on it or another IT stock you prefer in a comment below. Now if you would be interested in getting access to my notes, then consider memberships. By becoming a member you will get access to Discord, where I share all my Google Sheets documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I've looked into several other companies, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.